84% of homes in Ontario sold below asking price in December. That's the highest number in at least 10 years. And that's not even the most shocking chart that I'm going to show you today. There was a lot of pretty rough data points that came out of the Toronto Real Estate Board's most recent Market Watch report, including the fact that 2025 actually ended up being the slowest year for resale homes in the GTA in at least 20 years. For the last decade, real estate agents have been trained to say the same thing. Just price it low and the market will take care of the rest. This strategy seems to be dead because the market isn't bidding up anymore. Buyers are actually bidding the market down. Sellers have to move their prices down to meet them. At the peak in 2022, the median home in Ontario sold for nearly 120% of asking price. And today, that number has dropped to 97.2% at the average and 96.4% on the median. And I conveniently drew a line on this chart that I posted on Twitter here to show that we haven't seen a lower median sale to list price ratio as long as this data set has existed. So Toronto real estate is setting records. Number one, slowest year in at least 20 years. Number two, lowest sale to list price ratio in at least 15 years. Number three, highest percentage of properties sold below asking price in at least 10 years. I posted months of inventory on X here as well. And you can see months of inventory was also the highest months of inventory that we've seen on the available data set. This is a complete change in the way that the market works in Toronto. I mean, confidence is going to be completely shot after this. Months of inventory here you can see is hovering along 15-year highs, and that's your 1 month months of inventory. If I go to 3 months of inventory, basically we've got inventory at 15-year highs. And it's even worse when I cast that out over condos, not just detached, which I'll show you in a second. But it makes me think back to that period in like February 2022, right before the rate hiking cycle started, when everybody was saying we had this shortage of listings, inventory scarcity or whatever it was. We do not have a listing problem anymore. Now we have a buyer problem. This inventory shortage is basically completely been flipped on its head, and now we're in basically the most extreme buyer's market that we've been in decades. And so homes are taking longer to sell than any point in the last decade. If you look at the bottom right-hand corner of the market watch here, you can see that the days on market, average days on market, PDOM and LDOM are both still up from last year. I can pull up the days on market chart here. Average days on market are basically tied with their previous peak, which was 2014, over 10 years ago. Median is a little lower than the peak that we saw in January of this year, which would tell me that you'll probably see a higher high heading into January of this year and December of 2012. And that's for condos. So basically we went from like the fastest market ever to the slowest market ever. And this is now officially the slowest Ontario market in at least 10 years. And if you think sellers haven't noticed, wait until you see this next chart. This top line here shows your terminated listings. So every single month in 2025 set a new record for terminated listings. It's either capitulation, it's sellers giving up, or it is pent-up supply of sellers who are going to list in the spring next year when hopefully we have a stronger real estate market than we did in 2025. The market is basically structurally flipped. Listings are elevated, sales are weak, and on an annualized basis, the weakest that they've ever been. This gives us a gap of rising inventory that even those record cancellations can't keep up with. And rising inventory means that leverage shifts to buyers. And basically we've run out of demand, and demand is exhausted. You have a limited pool of buyers. Most of them are incredibly scared. They're taking their time. They're afraid of the economic setup, et cetera. And so, and I think a lot of them are also concerned that prices will continue falling, because if you look at the price chart, prices have been falling now for an entire year. So it would be reasonable to assume that they'll continue to do that. So if you look at the last 3 years here, 2025 is basically your lowest sale prices. In almost every month this year, well, in every month this year except for January, house prices have been falling on a year over year and on a 2-year basis. Lower than 2022, which I just added. This is a red line in the chart. Lower than 2021. And actually approaching your 2020 numbers here. We're about 7% higher than your 2020 number. So 4 years of gains gone from house prices. And so if you look at the peak here of about 1.2, and this is 1.1, you're down about 30% off the peak now. Now the prices have hit another little bit of a down leg here. And so prices are continuing to drift down, as I mentioned that they would several times over the last few years. We'd sort of go in this kind of flat, sideways, grinding down market, but sellers are still anchoring to these 2022 comps. Buyers are refusing to chase them. And so price discovery is happening, but it's happening very slowly as sellers slowly adjust to the reality, right? And that sale to list price ratio that I mentioned tells you pretty much everything you need to know. The lowest median and average sale to list price ratio that we've seen, obviously a massive dispersion between what buyers are willing to pay and what sellers are requesting. And pricing accuracy matters again a lot for listing agents and even for buyers who want to make sure that they're paying a fair price for the property that they're offering on. And so the new rules seem to be like overpriced listings don't sell. The idea of testing the market tends to get punished. The first offer is often the best offer that people are going to see. The massive increase that we've seen in terminated listings would tell me that seller psychology is breaking. If sellers are pulling listings at an increasing rate, it doesn't really signal confidence, right? It's either that they're refusing to accept lower prices and they've decided to give up selling, they're going to rent the property out, or they're just not going to make the move that they were planning to make, or they're maybe planning to relist it in the future because they've just realized that this is the worst market that we've ever been in, according to Rob's chart here. Fewest sales that we've ever seen, basically. And so either they're giving up and they're never going to do anything with the property they had listed, or they're creating future supply, right? Like, just because they took it off the market doesn't mean they're never going to sell it again. And my expectation would be that it's probably just as likely that terminated listings are going to be future supply. This is why I've said in a lot of my recent videos that I think pent-up supply is a much more likely outcome than pent-up demand, right? Everybody's talking about pent-up demand. Oh, all these buyers haven't bought. What buyers? Like, what buyers can afford to purchase a property right now? Based on median household income, prices of houses in Canada right now, that there's a very small number of people who can actually afford to buy a property at the moment. And so the only thing that's going to bring those people out of the market is the economics of buying making more sense. Prices relative to incomes would have to improve. But for sellers, I mean, it's completely different, right? Like, there's nothing economically that needs to change for them to re-enter the market. And so today's or 2025's record level of terminated listings could be tomorrow's motivated sellers. So what does this mean for 2026? It means that you, as a buyer, you probably have more leverage than at any point that you've had in a decade. Conditional offers are back. Price reductions are normal again. Negotiating and lowballing isn't rude, it's expected. And the power of and the strategy and the ability to win in a market like this isn't in trying to time the bottom. It's in creating the bottom and forcing better terms, better price, better closing. I mean, as a buyer, unless you're looking for a very unique product that is very scarce, you should be able to get pretty much everything you want in a negotiation right now. For sellers, you basically have the opposite set of circumstances. The market no longer bails out bad pricing. Having a real strategy and proper marketing and presentation matters more than it ever has. You can't really get away with the 3 P's of real estate anymore, which is like price, paperwork, put a sign up, and pray. There's 4 P's. 4 P's of real estate. That's not a strategy that works anymore. If you're a seller who doesn't need to sell, like if you're offloading an investment property because you want to get off the roller coaster or whatever, you're probably just going to choose not to, because it's, again, the worst market and most difficult market to move product in. If you do need to sell, price realistically. Like if you have to get a transaction done, you have to be realistic and adjust to what the market is saying. And the market does not care what your neighbor got in 2022. They know, they've seen the comps as well. And they went and looked when they were trying to figure out why you were priced the way that you're priced. But buyers don't care about pricing even a year ago, because we're down 5.1%. And as soon as the media picks up all these headlines that we're down 5.1%, people are going to realize that what this chart says, which is that every single month this year, except for January, basically February through to December, posted price drops, right? Prices fell for an entire year. You give people 12 months in a row of negative headlines about the real estate market, and they're not going to be rushing out to go and buy houses. There's another sentiment piece that I think is important to look at right here. If you look at your year-over-year summary on the Treb Market Watch, 2025, we are so close. We're $6,000 away from the average price being under $1 million. I would say that in January of this year, you'll see house prices fall below $1 million. Sales are down 9%-ish. New listings are up. Active listings are up. Supply continues to outpace demand. This is what I'm saying. Pent-up supply is way more powerful than pent-up demand right now. And that's only going to get worse because properties are taking longer to sell based on your days on market, which means that inventory has a chance to continue accumulating, which means supply can continue to outpace demand indefinitely unless that changes. Looking at the sales and average price by home type, your detached saw the biggest increase in the number of sales, up 10.5%. It's actually the only product type that saw an increase on a year-over-year basis, but prices still fell 4.5%. Now, that was the best performing asset class other than townhouses, 416 townhouses. 416 townhouses actually went up in value, but their volume was down like 22%. So I'm going to call that maybe potentially a low volume pump. Like we're looking at a couple thousand units here. Across asset classes or product types, 6% decrease in detached, 11% decrease in semi, 6% decrease in townhouse, 7% decrease in condos on a year-over-year basis. I would not call this a good market or a strong market. Deals do exist, but only if you underwrite them properly and completely price in any risk that you're taking in buying that property. If you're investing, cash flow discipline matters a lot. Patience has been rewarded for at least 2 years and will probably continue to be rewarded for a period of time. So is this a crash? Like it's probably going to say in my clickbait YouTube thumbnail and title? No, it's not. It's actually probably something worse and something far more uncomfortable for sellers, because a crash like prices in and realizes the loss almost immediately or as soon as possible. Whereas this grind down, I mean, if people's biggest burden is the fact that their interest rates are going up and their monthly mortgage payments are taking cash out of their pocket every month, I think that they would prefer a quick end to that pain rather than this like slow, steady grind down. And so if people want to see sellers get punished, which does seem to be the vibe from most of you who are calling for a crash, no offense. Well, I guess I actually do kind of mean offense, because like everything that you say seems to be with the intention of offending people. So there's a taste of your own medicine. But if you want sellers to suffer, you probably want the market to keep grinding down. We're in a market basically where prices are negotiated again. You can get a home inspection condition. You can get a financing condition. You should even be able to get a sale of buyer's property condition. You're seeing that a little bit. Depends on the market, obviously. And it's funny, like, you know, we'll put offers out on properties conditional on sale of buyer's property, and agents are like, oh, well, I'm not going to do that. It's like your house has been on the market for freaking like 90 days. Like, here, what are you going to do? Just get a better offer? It's funny too, because like if you take it, typically it has an escape clause, which means that you can continue to market that property for sale and accept a better offer, conditional on the release from that original offer, and then it would bump that offer. So you can actually, like, it's, to me, it's a bird in the hand and a bird in the bush. But you've got a lot of agents who like haven't even seen these conditions in the last 5 years. We're in like buy before you sell markets for such a long period of time. But I think you'll see sale of buyer's property conditions make a pretty big comeback in 2026. And sellers should be willing to accept that, right? Like if you're a seller, you should be able to empathize with the buyer of your property who's also going to have a hard time trying to sell their house. And if people are like, oh, well, I don't have the luxury of doing that, I'm selling my house first, and then I'm going to go buy. It's like, well, maybe just demand more of your agent. Anyway, if you want deeper breakdowns like this, tools, charts, deal analysis, check out realist.ca, which is my real estate investment coaching website with Nick Hill, my co-host on the Canadian Real Estate Investor podcast. Hit subscribe, drop a comment, and check out valerie.ca if you are a buyer or a seller trying to make a move in the Ontario real estate market. We'd love to help you, and we use AI to do that, which makes realtors more efficient, and I mean, probably will eventually eliminate them like every other profession in the world. So if you hate realtors and owners and sellers or whatever, I feel like the crash people just hate everyone. But if you hate realtors, you should like Valerie, because if you are on the thesis that AI is going to replace everyone and realtors is among them, it's a high likelihood that we'll be the ones to do it. Not that that's my goal, realtors. Anyway, thank you very much for taking the time to watch this video. I'll see you again as soon as I can.